Hey there, fellow investors. Welcome to the Dividend Uncle, your go-to finance and investing channel with a uniquely Singaporean flavor. Today, we're diving into the world of real estate investment trusts, REITs, and exploring two hidden gems that have shown remarkable resilience to interest rate hikes. With the US Federal Reserve raising rates multiple times in the past year, interest rate impacts have rippled through the market, affecting highly leveraged investments like REITs. But fear not, we've unearthed two REITs that have weathered the storm with flying colors: Daiwa Logistics Trust and Frasers Logistics and Commercial Trust. Let's take a closer look. Market environment, the impact of rising interest rates. Before we delve into these resilient REITs, let's set the scene. Over the past year, the US Federal Reserve has tightened its monetary policy, raising interest rates a staggering 10 times. Such moves often reverberate globally, and Singapore is no exception. Many REITs have felt the pressure, with distributions strained as interest expenses climb. Why are rising interest rates a concern for REITs? REITs are typically financed with debt, and when interest rates rise, the cost of that debt goes up. This can lead to lower distributions for investors, as the REITs use more of their revenue to service their debt. In addition, rising interest rates can make it more difficult for REITs to refinance their debt, which could lead to defaults. However, we've identified two REITs that stand out with their minimal impact from interest rate increases. First up is Daiwa Logistics Trust, a Japanese-based REIT that has been gliding through the storm with ease. With a gearing ratio of 38% and 100% of its loans fixed, it boasts an impressively solid financial foundation. But what truly sets Daiwa Logistics Trust apart is its base in Japan. The Bank of Japan has maintained low interest rates, providing stability for the trust's JPY-denominated debt. As a result, Daiwa Logistics Trust remains relatively unaffected by the US interest rate hikes. It's a testament to the benefits of geographical diversification in a globalized world. Now, let's shift our focus to Frasers Logistics and Commercial Trust, a true enigma in the world of REITs. Despite a challenging environment, Frasers Logistics and Commercial Trust has demonstrated exceptional resilience. Its average interest rate only edged up slightly from 1.6% to 1.8% from March 2022 to March 2023. In comparison, other major REITs in Singapore have experienced far more significant increases in their interest rates. The likes of CapitaLand Integrated Commercial Trust and CapitaLand Ascendus REIT, with similar profiles, saw their interest rates jump from 2.3% to 3.1% and 2.1% to 3.5%, respectively. This begs the question, what sets Frasers Logistics and Commercial Trust apart from the pack? Possible reasons for resilience. Furthermore, another potential reason for Frasers Logistics and Commercial Trust's resilience could be attributed to their exceptional management skills in structuring loans and employing interest rate hedging strategies. A savvy approach to managing interest rate risks can provide a significant buffer against fluctuating rates, shielding the trust from adverse impacts. While the intricacies of these financial maneuvers may elude the average retail investor, we can still appreciate the positive outcomes they yield for the trust's stability and performance. In the case of Daiwa Logistics Trust, its ability to remain largely insulated from interest rate hikes can be traced back to its prudent use of fixed-rate loans. By securing their loans at fixed interest rates, the trust gains a shield against the volatility of interest rate fluctuations. Additionally, their focus on Japanese assets, along with a favorable interest rate environment maintained by the Bank of Japan, further bolsters the trust's resilience to global interest rate movements. As investors, it's essential to recognize that while we may not always have access to all the intricate details behind these REITs' resilience, we can still observe their steadfast performance during challenging times. The dedication of their management teams, combined with prudent financial management and strategic asset allocations, strengthens our confidence in these resilient REITs as potential additions to our investment portfolios. As we navigate the dynamic world of REITs, the impact of rising interest rates can't be ignored. The past year has taught us that resilience is a key attribute to consider when investing in REITs. Daiwa Logistics Trust and Frasers Logistics and Commercial Trust have demonstrated their mettle during challenging times, providing potential opportunities for investors. While the exact reasons for their resilience may not always be apparent, we can learn from their examples and appreciate the benefits of diversification, prudent financial management, and astute interest rate hedging strategies. Remember, as retail investors, our focus should be on the long term and embracing the potential rewards of a well-balanced portfolio. Thank you for joining us on this exploration of resilient REITs, and stay tuned for more exciting financial insights on the Dividend Uncle, your ultimate finance and investing channel with a Singaporean twist.